Hi everyone, welcome back to the podcast. It's me and Dhana here. The last day of August, and it is Saturday. I hope you had a wonderful August, and you're looking forward to a wonderful September. There's a couple of more months, and this year is over, Dhana.
Yes, sir.
It's flying, no time. Yeah.
Seriously, this month is very tightened for me.
Yeah, that's what happens when you're doing a lot of research and you're studying, and you're looking at the stock market, looking for opportunities. Somehow, time seems to be flying. So I'm glad to hear that time is flying for you. And today, what do we have? We have something which you wanted to talk about for some time. Something you've been asking off camera, and we discussed it, and Dhana said maybe it will be useful for everyone. So we brought it to you guys. So what is it that you're talking about?
Sir, first of all, I need to understand why we need to avoid the government stocks. I already read about ordinary stocks, extraordinary profits. So sir has been mentioned clearly why we need to avoid the government stocks. I have some analysis. If the government changes, something will happen, what the government will take. Many of the reasons I have been going to avoid the government stocks. Especially they are asking about P&G Invit, sir. I know, sir, he was told only purpose of the dividend pay. So it will be a good interest.
I understand.
Yeah, sir.
P&G Invit is something that we have talked about a lot. And why Anand consider P&G Invit was because it was offering a dividend. And where share price was sitting, it was almost like having a fixed deposit.
It has crossed that.
It has crossed the threshold. So imagine you had a fixed deposit. For every 100 rupees, you are getting 11 rupees.
11 rupees, 12 rupees, like that.
Yeah. So it was a great fixed deposit. Yeah. So if you look at it like that, purely in terms of that, each share at the price point it was at, and then dividend yield, if you compared and saw, it was giving a great, very handsome dividend yield. So for every rupee, you were getting better than bank fixed deposit. And that was the only reason we were thinking of considering it, because it's better than having a bank FD. But in terms of capital appreciation, if you see P&G Invit, it goes nowhere. Yeah. The reason why P&G Invit doesn't go anywhere is it's paying out all its profit.
Correct.
There's no capital appreciation. There's two things you must realize. When a company makes money, it can hold on to the money and allow the share price to rise.
Okay.
Or, I'm talking about very simple. Okay. It's a lot more complicated than this, but I'm keeping it simple. So otherwise, it can give it to you. So there's like a piggy bank, right? You have a hundi at home.
Correct.
If you keep putting money in that hundi, that hundi is of value. Yeah. But every month, on the last day of the month, you put your hand and say, scoop everything out and go and have a party at every 31st of every month. You're like, okay, hundi party. And you swallow everything what is there. That hundi will not grow.
Yes, sir.
So the value of that is only temporary.
Correct.
So there's no reason to appreciate the capital. But if you allow that to grow for years on end, that hundi will suddenly become something of great value in 5 years' time. So this is what happens to P&G Invit. And P&G Invit, the reason why they do that is, who's the major shareholder of P&G Invit?
Government.
Correct. And government wants to put a straw and go.
Correct.
Why? Because government needs
money.
Correct. That's why there's no capital appreciation. Now P&G Invit price where it is, that advantage of having it as a FD is vanished.
Correct, sir.
So if market crashes, blood on the street happens, as you say, and P&G Invit collapses into nothing, it will still continue giving dividend because of the government company. Correct. Right? They still have those rental receivables coming. If you see how the company is structured, they lease stuff out and they're getting rent for that, and the rental, whatever they're getting as rent, they're giving it as dividend. So that will continue happening regardless of the price fluctuation. So if that price corrects and corrects severely, let me tell you where it is right now. It's at 92. So let's look at it. It peaked at 138, then it's come down in the last 10 years. And when we were talking about consideration, it was very cheap. The price is at 92. So if you look at per year, the interest they give, it comes around 11 to 12 rupees. So after your tax is taken from that, it's around 9 to 10%, which is like a bond deal.
Yeah, yes, sir.
Okay. But in terms of capital appreciation, there will not be much. So if you're looking at interest rate of P&G Invit, the only reason you need to look at it is it's like holding a bond.
Better than FD?
Yeah, better than an FD. At 92 rupees, it is something ranges to consider again. The last time I tracked it was at 137, 120. At that point of time, it didn't make sense because the dividend yield with the price has dropped down to less than 5-6%. Correct. So it didn't make point investing into it. Now that it's corrected down to 92. It's in the range to consider if you are looking at interest in P&G Invit. But do realize this company in terms of growth will really not grow anywhere. This is not going to become a multi-bagger. This 190 rupee share 10 years from now will not become 9,000 rupees.
We are over-excited, sir. If the dividend is also come, the price also up, we have a double benefit.
Yeah, that will not happen because it doesn't make logical sense. Like I told you about the hundi story, right? So either you get dividend or there will be capital appreciation.
Correct.
If both Cannot happen, right? I mean, if it does happen, that means they're cutting down the dividend they can give, or they're not holding back the capital they want.
Correct.
So, in terms of PG Invit, majority of the money comes given out as dividend. There won't be really any capital appreciation in PG Invit, and whatever capital appreciation happens will be if they acquire new assets, which may happen over the next 5-10 years. But because it's a government-run company, it's very hard to really reliably say what will happen with this, because government companies are swayed by the government. And government is swayed by politics. And what are politics? Election cycles for every 5 years. And central government and state government don't cooperate on many things. And this is one of those things they don't cooperate on. So, as an investor, you'll always get jammed up. But in terms of returns, you put 90 rupees and you're getting back 10-12 rupees, and after tax you're getting 9 rupees in your hand. That's fabulous.
Correct.
In terms of instead of holding a bond or an FD, you can put that PG in.
Not for the investing purpose of the capital appreciation.
No.
Clearly minded.
Yeah.
And then the thing why we need to avoid the government stocks. That is the main thing.
Main thing to avoid government stocks is government is very bad at running business. You can see. If everybody, you ask them, if you think government, how is the government running the country? We all be like this. How is it doing roads? Like this. You know, how is it doing, health services? This, that, everything we say government is bad. But let alone business alone, government business, no, it is good.
Because the finance minister and prime minister has been told,
yes,
if you are investing, you will be a good value. They also tell means, if our prime minister tells.
Exactly, but you know how government runs the country and how it's running everything. So you know it's terrible. Right? You don't look at anything the government is doing is a fabulous job. Right? You don't talk like we always look and say Singapore is doing much better. In this country is doing much better. Our government is not doing. So when you know that apparent truth, government companies also don't run in great shape. They're very bloated. Okay, they have lots of expenses on them. If you look at the balance sheet, you'll see they don't make much money.
Correct.
And they can monopolize things. They're not doing any monopoly. Like BSNL. Government BSNL was a monopoly. Government opened it up and everything is gone now. Now who wants to buy BSNL?
No one.
Yeah, if you had to take a phone connection, you will not take BSNL. Now maybe some of our viewers will argue saying BSNL is better than Vodafone or something. But in general, I'm saying.
In general.
Correct. So when we don't want government services and we avoid government services, that makes sense when it comes to investing also, that you should avoid government companies, because simple reason, government is beholden to politics. And there's so much of bureaucracy in it and it's so slow. Any decision made in a government company goes on forever and it doesn't move. You don't have to believe me. You look at it. Even government-run banks. The government-run banks, bank manager doesn't decide who gets the loan. The government will tell him, you give that guy loan.
Correct.
Even if that guy is useless and he will not pay his loan, the government say, no, you give him though. Because of political reasons. And these guys are all prisoners to that. Because they will have to answer to the government. Government is majority shareholder. So this is the reason I say avoid.
Another thing is also, sir, we need to avoid government control the sector. We need to avoid like fertilizers.
Yes.
Like government control sectors.
Yeah,
like cements.
Because sugar. These are all classic government-run sectors because of political reasons, for elections, they decide the sugar price. They decide the cement price. So your profit margin gets eaten up into it. So government will say, don't worry, I'll give you subsidy. But then government has to pay you, no? And you know how fast government pays you back. It'll take money from you before even you get paid, they remove your tax. They tax you up and down the wazoo, right? Before you can even enjoy any of your salary, they've taken your tax. But when you have money as to come back to you, they'll say, wait, Baba, I'll give it to you. What's the rush? Imagine we told the government that we'll give you tax. Why are you rushing for tax, man? We'll give it to you. First, let me enjoy my salary. 6 months later, 1 year later, I'll give you the tax. Last year's tax, I'll give you next year.
Yes, sir.
So that is the issue.
Why I came up with that means my circle of competence is farming. So I am interested keen to understand the fertilizer stocks because I know the
no, but if he's let's say he's absolutely right. Fair enough. Your circle of competence is farming.
Yeah.
But there are lots of things in farming which are not related to government, like tractor. Correct. Manufacturing, selling tractor is not related to government. Pesticides, making and selling pesticide is not related to government. Right? So you can find in your circle of competence, let's say construction is circle of government, cement is only government, but steel companies, there are different options. So you can look and find avenues in your circle of competence where the government is not involved. The only problem will be, let's say my daddy, my uncle, everybody works in government, I only know government. Then you shouldn't be watching my channel. Because you will probably be better off with the government job. And you can all watch Indian too to understand government.
So that's why I come with that. And many of them are asking about, please talk about these three government stock. We need to avoid that's a thing, but please talk about that. First one is your BPCL, sir. Why we need to avoid? First of all, we are clearly telling about we need to avoid the government stock. But they are asking why, the reason behind that. Because if you are analyzing
Bharat Petroleum Corporation, right? Let's look at 10-year P ratio. It's not gone anywhere. It is petrol, right? Petrol is in high demand.
Correct.
Right? Logically thinking, petrol price is always going up.
Correct.
So why is this company always like this in doldrums for 11 PE? Because they do not have their own petrol. They are getting oil, they have to buy oil, right? And they bring the oil into India. They process the oil and they have to sell it in India. Reliance, you know what the difference is between this and this? Reliance doesn't sell its products in India. Brings the oil into India, processes it, and they sell it to the international market. If BPCL was exporting most of its oil, whatever they're processing, petroleum products they're processing, they sell it, they're exporting it, the company will be very different. Okay, and see the amount of debt, long-term borrowing.
Wow. It's like EPS increasing like that, borrowing also increasing.
How you want your earnings to go is how its borrowings are
correct.
Going. Right? So they just keep borrowing. And everything is in government subsidy. So government will be owing this company money and they'll never get paid. Government decides rupee-dollar price. Government decides who you're going to buy oil from, when you'll buy oil from. Government will decide the petrol price. Then government is his boss.
Correct.
Manager shareholder is government.
Shareholding better. Government.
Promoters, government. President of India owns. So there you go.
It's a simple thing. Just we can avoid, sir.
But people I understand because I made the same fundamental mistake when I started investing. When I started investing, I asked like government is. Why? Because it's owned by the government. Government is not going anywhere. Government of India is here.
Correct.
But if you're talking about a business and you want business to be run nicely and efficiently and without unnecessary bloating and wastage of money and everything, none of these government companies will be doing that.
IRFC, sir.
I don't like that one. But anyway.
IRFC, last one.
What does this company do? You tell me first.
I didn't know, sir, because I'm not tracking any government stocks.
So it's a finance company.
Finance company.
Correct.
Literally a finance company.
Correct. So in finance company, what do you look at?
For price to book, sir.
Mean is where? Price to book.
0.9.
Correct. Where is it now?
Nearly 5.
Where's the value? Forget everything else. Okay, they borrow money from the open market. Then they're letting it to the railways. Okay?
What a business model it was.
Okay, let go of all that. Right? But it's leasing to the railways. It's financing leasing for the railways. Basically a finance arm of railways. But see, it's book value where it is right now. So even if you argue everything else, it's not at value.
Correct. Right now it's not a value. That's a simple thing.
And if people who argue about PE ratio also can see, where's the value?
6.4. Right now it's at 36.
Of course, these are all new companies. They're not like very old companies. So people will argue that also. But there's enough track record for you to see. They're not like brand new. They're 2021. So if you look at it, there's nothing much to write home about. And if you see ownership also, he owns 87% of the company. Even FIs are not interested.
Public also not.
The only lamb which is eating is public. Some of the shareholders in public say. Because they're watching your social media, YouTube, and
famous people are telling, go for it.
Yes.
It will be a good thing.
All the talking heads are pushing it because government is, all the social media and all owned by the government. All your TV channels are owned by the government. So government of India will, finance minister will call and say, hey boss, Adani pushed my stocks. So they're pushing.
No value on that.
Yeah.
So apart from the PG Invit for consideration of the
only because of dividend yield at a certain price. Other than that, there's nothing
apart from the all government stocks are not doing very well. So that is the video conclusion.
Yes.
So that's it.
Look at it the way Anand said it. Everything else about the government is terrible. Why is this alone you think is great? Your own logic will defeat you. You don't believe the government does very great in anything. But business alone, it does.
It does good.
How is that? That makes no sense.
Okay. I think they clearly understand that.
But it's okay.
Yeah.
I understand the intention. And I'm happy. The reason they're asking these questions, they want to invest, they want to find value. And they think they've found value. Anyway, I hope this video was informative and entertaining as always. Last day of the month. And tomorrow will be a new month, a new day.
New day?
Yes, and you'll be recovering from your revelries of the Saturday evening. And me and Dhana will catch you there and help you ease your mind and release some of the soreness in your head, I guess. Thanks for watching the podcast, guys. Do like and share and support Dhana here. And we'll be back with another one tomorrow. Bye.
Bye.